I actually had a client that was being audited because they had said that he didn't report all his income, only to find out that the Cash App he was using, he was sending money to his wife constantly, like her allowance. Well, the IRS just got a report saying that, she got like $15,000 throughout the year. So they thought that they had $15,000 extra income that wasn't reported.
Welcome to the Flywheel Effect, the podcast where ambition meets expertise in the world of luxury home services. Whether you're an entrepreneur, a small business owner, or a forward-thinking professional, this is your platform for growth, profit, and prosperity. Each episode, we dive deep into how to leverage data for smarter business decisions and share insights that help you transition from technician to visionary. Let's jump in.
Hello, and welcome to another episode of the Flywheel Effect, where we're sponsored by Vital, your business excellence and benchmarking service that's going to make your home services business optimized and ready to work for you instead of you working for it. Brent Sonnek-Schmelz, along here with my co-host, Matt Bernath. Matt, how you doing today?
Man, I'm doing fantastic. Had an incredible last weekend, a little last-minute reggae festival with some friends and my daughter. And so that was a lot of fun, and we had the opportunity to kind of run into a couple of the lead singers of some of the bands, so it was fun. And then looking forward to a fantastic Father's Day weekend. So happy early Father's Day for the fathers out there. Of course, who knows when this is actually going to get posted. But Brent, and Carlos, I don't know if you have kids, but looking forward to a fun Father's Day weekend.
Oh, yeah. Hopefully it'll be fun. My last weekend was even more fun, taking my 4-year-olds to Disney. What could be better than that? I know people roll their eyes and say, "Oh, Disney, like who could bother?" I had a great time. It was so much fun.
I just did the whole Disneyland thing a couple weeks ago, so
That's awesome.
That's awesome. And that here is Carlos, our guest, Carlos Samaniego. I pronounced that right? Was I pronouncing
Samaniego? There's a go at the end.
Samaniego.
Perfect. There you go.
All right. And Carlos is a tax expert who understands all the issues that face small businesses with taxes. And I'm going to let him get into this a little bit. But Matt, circling back around, I cut you off. You're about to say something.
Yeah, I was about to say, for those of you who don't know Brent as well as I know Brent, one of the reasons he can go to Disney World with 4-year-olds and have an amazing time is because Brent has this incredible childlike nature to him that he can tap and shows often, which is fantastic. It's a contrast to some of the hardcore business side of Brent that a lot of us see. So as he was describing it to me, I had a full sense for exactly what that was going to look like for him hanging out with his 4-year-olds, and no surprise that he had a great time and was very excited about that.
That's awesome.
For our first ride was It's a Small World, and it's like, I haven't done this in 40 years, and it's still as awesome as I remember it when I was 8.
Yep.
So it was great. So bouncing back around here, so Carlos, how are you doing today?
Amazing. And it's an amazing Southern California weekend this weekend, which is perfect for Father's Day weekend. I am the father of 2 children. Actually, I shouldn't call them children anymore. I have a 29-year-old son who was a Navy Academy graduate in the Navy,
Nice.
Just got out of the Navy a few months ago, joined me in the business. And then I have an 18-year-old daughter that just graduated last week. And she's heading off to the U.S. Coast Guard Academy here in about 10 days. So
you have 2. So you're gonna have 2 academy grads. So Navy, that's hardcore. What did he do in the Navy?
he was a surface warfare officer on 2 destroyers down at San Diego. Well, intelligence officer, a weapons officer, and a few other things. So he ended up giving us a grandchild, and his wife is also a Naval Academy graduate. They met at the academy. And after they had the child, they had realized there was a very good possibility that they were both going to go on deployment at the same time. And he's just decided, you know what, Dad, I'm going to let her, because she really kind of wants that career track. And he goes, I'm going to stay at home. And he's like, he actually kind of surprised me to tell me that he wanted to do exactly what I was doing. So,
Wow.
That's cool. Were they living on Coronado?
they were not in Coronado. They're in San Diego. They're in Spring Valley, right 30 miles from the base. So,
Okay, cool. And then the Coast Guard Academy, that's in Connecticut.
yeah, New London, Connecticut.
New London, Connecticut. My brother went to Connecticut College down the road.
Oh, yeah. No, exactly.
And he enjoyed it. It's a great little corner of Connecticut, right on that. Was it on the Connecticut River?
Yeah, we're kind of excited. I'm actually a blue and gold admission officer for the Naval Academy. They reached out to me a couple of years ago. It's a local liaison that assists people getting into the Naval Academy. And my daughter did not have, her name's Bella. She watched my son as a child go through the Naval Academy, and she thought he was insane. Why would he put himself through this process, right? And as she grew up and gone through high school and sports and stuff, she told me, what, Dad, I'm really interested. And her dream was to go to the Naval Academy, and she worked hard. And last year, junior year, she started that process, applied to all 5 service academies, and actually was recruited to play Coast Guard. Started recruiting her to play volleyball there. Navy started recruiting her to play volleyball, and went through that process. And when everything kind of came out this last 4 months, she got accepted to West Point, Coast Guard, West Point, Merchant Marine Academy, the Coast Guard Academy, and what was the other one? Oh, got a 4-year ROTC scholarship to any school in the country that had for Navy. So I thought she was going to go that route because that seemed like a really nice route. Yeah. But and Navy put her on a waiting list. So I think that the ability to go play collegiate volleyball at Coast Guard kind of was the tipping point. And then she got a chance to see their mission said. Basically, their job is to rescue people, handle port security, stuff like that. She really liked that aspect of it. And she pulled the trigger. She's going to Coast Guard.
Amazing. Amazing. You must be really proud, Carlos.
You know what? I'm super proud of both these kids. They worked hard. They deserved it. So yeah.
That's awesome.
Yeah,
that's great. Playing is the Coast Guard Academy D1 or is it D3?
It's D3. Yeah, it's D3. And I think what kind of tipped her on the Navy's D1, and the coach that was recruiting her during that process ended up taking a job at Miami. And usually when that happens, the new coaches have different, people that they're looking at, and that kind of fell through there. So, but again, she's excited. I'm excited for her. This is a difficult time in our country, and wars happening, and I really enjoyed it because myself, I was an Army medic, and then spent 11 years as a first responder, as an EMT medic out in Southern California. So in a lot of ways, Coast Guard is very similar to that first responder for, emergencies and things like that. So super excited for her. Yeah.
That's cool. Well, thank you for your service and for your family service, Carlos. It's amazing.
Appreciate it.
And I'm excited because now that you're going to be an empty nester, you're going to have so much more time to help people with their taxes.
Yeah, you know what? Me and my wife, this has been, if you're listening to this as a, entrepreneur employee, and you got kids in school, and this is a totally different phase, these the last 20 plus or 20 years, basically longer than that. We've been, kids in our life every day. And we were, for those of you guys that, we were volleyball parents, club parents. So, traveling the country playing volleyball, basically. So everything's about your kids, and you're Brett, you got some young ones. You're going to realize that your entire life is centered around that. And now all of a sudden it's just me and my wife. And what's interesting is for a lot of people is like, somebody was just telling me this, is that there's sometimes a disconnect because everything is about the kids. But my wife helped me co-found my company. So, and she works with me. She's right over my left shoulder. We get up in the morning, have coffee together. We drive into work together. We work all day together. We go home together. So now we just get that opportunity to spend quality time and not have to worry about getting to a volleyball game. So
yeah.
Right. But you got your son coming back. That'll be exciting.
Yeah. He's staying in San Diego. Unfortunately, they're going to end up getting, I think next year, they're moving up to Monterey to getting stationed, or she's getting stationed up there. So we're going to take advantage of that.
Yeah, what a gorgeous place to live for a while. And where are you, Carlos?
I am in Redlands, California, which is basically an hour east of LA, southeast of LA, hour and a half north of San Diego, 30 minutes from Palm Springs. So I always call us, we're the centralized location of Southern California. Yeah. So we could pretty much get anywhere within about an hour and a half. So
yeah, we're practically neighbors. I'm in Anaheim Hills, so just the other side of Corona from you.
Oh, yeah. Definitely.
I've been through Redlands many times on the way to and from the ski resorts.
Oh, absolutely. And we've been to Anaheim quite a bit playing volleyball.
Yep. Oh, I'm sure. Yeah, no doubt.
So Carlos, let's dive into this. I think one of the things that intrigued me about having you here on the Flywheel Effect is knowing home service operators, who's our target audience,
Yeah.
taxes often are an afterthought. I think that they think of them as something to be avoided. Wait, how can they get their house in order in a way that they don't worry about them? They don't want to worry about taxes. Just like this is what we deal with at Vital. They don't want to worry about their finances generally, and their taxes is a subset of that makes it even harder for them to go through with it. Maybe they don't even file annually.
Yeah.
And maybe they say, hey, I'm just going to run everything of my life through my business and worry about it later. Like,
Yeah.
I think that's a reality of so many small business entrepreneurs. And I just want to dive in and like, really, what should people be looking at, and what's the way to make this streamlined so it's not really this big lift throughout the process?
It's interesting that you said that, because everything you said is 100% accurate. It's one of those things, it's an afterthought. It's like, you go to work, you make money, or you have your business, you make money, and then you got to go deal with this tax thing, right? And a lot of times we're just we're just trying to make, especially business owners, we're just trying to be able to make payroll, pay our bills, pay the rent, utilities, and we still got to pay this tax thing. And a lot of people tend to ignore it. In fact, it's how I got started in this industry. I mentioned earlier, spent a few years in the Army, came out, and then I ended up becoming a EMT medic in the Inland Empire. And kind of what started me on this train to helping people with tax issues is I went 8 years during that time frame. I was an EMT medic, AMR ambulance. Matt, you're gonna know who AMR is. That was my last employer, because I only worked at one company, but it got bought like 8 different times, and AMR was the final one. I finally ended up leaving that company. But the 8 years that I spent 8 years there, my first 8 years, I literally never filed a tax return. Never filed. I became an 8-year non-filer by accident, pretty much. And it's almost how everybody else gets in trouble. It's usually making a small mistake. And my mistake was my first year that I was working there, I was in my late teens, early 20s, and I was working a whole lot of overtime. And a young man, or the older guy, the paramedic in the ambulance, told me, dude, why are you working so much? I'm like, hey, trying to make some extra money for Christmas. He's like, just claim 10 exemptions on your check, and if you do that, you're going to get this big old paycheck. They're not going to take it all out for taxes, especially when you're working overtime. And guess what? I did that. Well, here's what happens when you do that, as a lot of people know. If they ain't taking out taxes, you are getting a much bigger paycheck, right? But all of a sudden, there's hell to pay when it comes to do your tax return. Because I ended up going to prepare the tax return. I had this big tax bill. I couldn't afford a tax bill, so what did I do? It's what millions of people do. Well, I'm just not going to file it. Then they won't know I don't owe them money. And I did that. Problem is that I did it year after year after year, because I started enjoying that larger paycheck. I remember I was able to move out to a bigger apartment. I ended up buying a brand new Nissan hardbody truck. That I have that big paycheck going on. And back then, and this is going to be critical, back then, if you're thinking 90s, right, the 90 time frame, for the IRS or the state of California franchise, for them to find you, they would have to mail you something. You'd have to open up the envelope and they would find you. And for me, that's kind of what happened. Like 8 years down the road, I get a letter from the state of California asking, hey, where's your tax return? Which caused that domino effect of, now I'm dealing with them because they want the tax returns. They want their money. Guess who they're notifying? They're notifying the IRS. The IRS, it just created this whirlwind effect. And I ended up having almost $100,000 combined tax bill between the IRS and the state. It ended up having 8 years of unfiled tax return and just living a life of fear during this time frame. Because every year I knew about that. What were you going to say, Brent?
I find it really interesting that you went 8 years without filing, and it took 8 years for them to find you.
Yeah.
And I think this is one of those issues that hits business people really hard too, is they don't file, they don't get in trouble, they feel they're safe, they do it again, and they do it again. And it's one of those, hey, I'm running I got a cash business, I'm running cash, but I'm short here, I need to spend money on that, I got to get a new truck. Like, the new truck is like always. And And now they feel like IRS doesn't bother me. What's the difference? I'm not in trouble. Like people says, oh, you're gonna get in trouble. You should pay your taxes. You get in trouble. Why? He said, right. I didn't get in trouble. Then all of a sudden you do.
The most common, the most common thing I hear from everybody when they reach out to me, I don't want to wake them up because they don't know about me. If I hire you, then they're going to know I haven't filed.
Yeah.
No, that's not how it works. But you're right. It's just, sometimes it could take years. And what's crazy, and I would have thought, this was back in the 90s, this was all happening. I would have thought here we are 2025 that, they would have fixed the system. A few months ago, I had somebody here with 17 years of unfiled tax returns.
Wow.
Whoa, with accumulated, and I think people understand
With accumulated debt.
interest
I
and
mean, it's
penalties.
just like, what the heck? And it just, now part of me understands because one of the things that had happened during COVID timeframe, Congress literally, the administration and Congress had made that decision. You know what? Since the world is dealing with a pandemic, there's no need for us to be chasing people for their tax bills. And they effectively shut down all collections, all notices. A lot of people came off IRS installment agreements that they were on. They pretty much stopped. I mean, so everything kind of stopped for 4 years. So a lot of people just took advantage of it. I'm like, well, I guess they forgot about the money. They forgave the money.
Yeah.
What's starting to happen is that literally this last year, they actually announced that, okay, we're going back to collections. And then the last 6 months is like, now you're seeing the letters come in. I wish I would have kept the stack, but yesterday I had 8 inches of IRS letters from all my clients, 8 inches. I mean, it was stacked that high. And it's just, they're coming.
Yeah, it's, and I think you bring up COVID. So everyone talks about, it's the stimulus package drove cash spending. And then people didn't pay their liabilities, which drove more spending, which led us into this inflationary order. It's like, we can have this whole other conversation that I like.
Oh, yeah. Then they borrowed money.
They borrowed money. It was low rates and all this stuff. But I think you bring up a point. We have this situation where people fail to file. And I think a lot of businesses get into this and because they're afraid. Or they feel like, why should I pay them? It's my money. I'll worry about that later. Yeah. My brother has this phrase. He's incredibly successful. He uses this all the time. But he says, I'll cross that bridge when I come to it.
When I get there.
And what that means to him is I'm not going to worry about anything until it stares me right in the face. And he has been incredibly lucky in getting away with it, that it has never come to bite him significantly enough. I mean, he pays his taxes, but he also gets audited every 3 years.
And you know what he did? He did exactly what I did. He did the same thing. He's like, I'm not going to deal with it until it's staring at me in the face.
Yeah.
And in my situation, the state of California was staring me in my face, and they basically jumped on me right away. They made me get into some type of installment agreement with them, and they pretty much left me alone after that because they just wanted the money to be paid to them, and I had to get into that. But the IRS still, even though they had notified them, they still took forever. And it wasn't until usually what causes people to really respond to something, their major life events. One life event is they get that notice that they got a wage garnishment from the IRS, or they got a bank levy from the IRS. That's kind of they're at that moment they have to. There's nothing they can do about it.
So I think I think let's shift this, right? Like I think we were talking about very much about personal, but I think we should shift this into the business owner and understanding their business perspective because I think they're a little different. Like I think what we're talking about personal is people with a W-2 who choose not to file, who get stuck because they're taking too many deductions.
Yeah. Okay.
On the business owner side, I mean I think Matt deals with this a lot, and I'd love to get his perspective of the number of business owners who choose not to file their business taxes for a variety of reasons, or choose to misfile them knowingly.
Yeah, I think. Well, and I'll add to that, Brent. I think it's a good point. And Carlos, you know better about this than I do, but I'll bring it up and maybe get your feedback on it. They're kind of collapsed, right? I mean, most of the small businesses that we're dealing with are either sole proprietors with basically the business being their personal, or LLCs or S-Corps where it's a pass-through. And so, the business owners that I've talked to who haven't filed taxes, it's collapsed. They haven't done their business taxes or their personal taxes because of the pass-through entity piece. And so I think there's both, but one of the interesting points as I was listening to Carlos's story is I think he was getting into how he got into this business, which I think is pretty interesting. So it might be good to hear the rest of that story about how you got into the business, Carlos, and then maybe shift gears into your experience of business owners who have not filed their taxes.
Yeah. I mean, again, it just, as I was saying, is that no one deals with their tax problems until it becomes a 911 emergency. And whether it's a wage garnishment, it could be a bank levy, a business bank levy, or what a lot of business owners, if you're listening to this, especially if you're a self-employed commission person, think real estate agent, insurance agent, or just a contractor, that you're getting paid, income because you're contracting work. A lot of business owners do not realize this. On business income, it can be levied 100% levy on your business income. So,
so Carlos, sorry, I want to interject for our listeners who may not know what that means. Can you break that down for them?
Okay, absolutely. If you're a real estate agent and you got a $20,000 commission and you owe the money to the IRS, and IRS notifies your broker that you owe $100,000 or $50,000 that you've ignored, they will take 100% of all that commission.
Right. So in the case of a contractor who, those are, our audience is primarily contractors.
Perfect.
What it sounds like you're saying, again, I'm just helping to clarify this for the audience or the listener, is if that wasn't the case, if you were just a W-2 employee, the IRS can only levy a portion of your income or a portion of your bank account.
Absolutely.
25%, you said?
Yes.
Yeah. If you're a contractor, they can take all of it.
Exactly. And I'll give you a perfect example. One of the first clients I ever had was a pool contractor. He did pools for developments. And the reason he came to me was because his wife, the teacher, had gotten that 25% levy. It was a joint return. So what caused him to come into the office is like, that can't happen to my wife. But when I had reached out to the IRS, he didn't know the IRS had sent levies to all the people that owed him money. That 100% of the money that was owed to him was to be paid directly to the IRS.
How do they find that? How do they find who owes him money?
The internal databases of the IRS on what type of work that you're doing. And you got to remember, all these contractors, if they're getting paid 1099, what usually happens a year before that? They're all getting these 1099s, right? So they have a general idea that they will automatically send those levies to any 1099s you've gotten in the past. And it happens. Sometimes they'll say, well, they sent the 1099. I don't even work for this company. Well, all they're doing is just looking at your past history. And then here's the thing, with the advent of AI, this is going to get a lot faster and a lot stronger. Because with the push of the button, they can find out all this stuff instantly.
Well, I don't necessarily trust the IRS to implement software properly, but
yeah, you know what? Especially with everything that's going on right now, yeah, absolutely. But they are using it pretty extensively right now, and the reason they're trying to use that is that they fired like 40,000 people over the last 3 or 4 months, so they have to replace that with something that's going to take some of that work load off.
So I had a prior business, and one of my main investors owned 9 check cashing stores in New Jersey. He liked to boast that he made $1 million a week on check cashing, just check cashing. And most of his business were contractors, and they pay the 3 or 5 or whatever percent because they wanted to avoid one of two things. They wanted to avoid the money going to their ex-wife or the government. So they wouldn't deposit in the bank because they know it's going to get pulled out or someone knowing about it. So they go to a check casher, maybe have the check filled out to cash or one of their employees, cash it, and walk out, get a $10,000 check, spend $500, so they don't have to pay the money to anybody else.
Oh, and the IRS caught on to that one because now check cashing places have to take the name and information of these people coming in cashing checks. Yeah. That now gets reported to the IRS.
They still do it. They still think they're going to.
Exactly. Because they don't know any better. They're like, oh, we're getting away from this thing. It's not.
Yeah, it's really, really interesting, Carlos. So I'd love to unpack what you just said a little bit. And, we're not trying to incite fear here, but for contractors, I think it's really important what you just said is once they catch up to you, if they decide to essentially take all your accounts receivable as theirs, your business is essentially gone overnight because most contractors are using their accounts receivable to finish jobs. That's not ideal, but of course that's what they're doing, right? So overnight potentially you could be out of business and really, really be struggling. So there's some advantages in dealing with this up front, but I want to ask potentially a difficult question to answer, but I think it's popping around in a lot of people's minds.
Yeah.
In your experience, Carlos, is it better for most people to get ahead of these things? They're 2, 3, 4 years in, they haven't yet been discovered. Is it better for them to deal with it now, or is it better for them to just wait until they get discovered? In your experience,
100% deal with it now. And
Okay.
you can take advantage of certain rules the IRS has. As a small example, I mentioned to you earlier, non-filing is a big problem, especially with a lot of business owners. That's a big problem. IRS knows that's a big problem. In fact, it's one of the number one priority enforcements right now is going after non-filers. I mentioned earlier a client with 14 years of unfiled tax returns, or the years of unfiled tax returns. Here's the thing. There is an internal rule at the IRS says that for you to become fully compliant, all they want is 6 years of returns. 6 years. So as of today, that would be 19 through 24. If you do 19 to 24, they're going to disregard everything else behind that.
Okay.
Almost kind of like you're forgiven type of a situation. Now, there's some little nuances that IRS may have filed a return on your behalf for those older years, but let's just assume that, like on this person, let's assume that there's nothing like that, but they just haven't filed. And they know they're making income. They're getting their, whether they're a business owner or they're W-2, they're making income. File 6 years, IRS says, we're good with you. Just file those 6 years. If they wait and then all of a sudden you get an IRS revenue officer reaches out to you, who's the last person you want to have to deal with, he has the right to ask for however many returns he wants. Totally different rules now. 100% different rules. So
That's a huge incentive to be proactive.
yeah, if you just have a collection and you just owe money that you haven't dealt with, if you deal with it now, we may only be dealing with what's called IRS's automated collections. It's just the collections department at the IRS. If you get assigned a revenue officer, now guess what he's asking for? More than likely, once he gets assigned the case, they are doing background investigation on you. They may be driving by your employer. They may be driving to your house. They don't go to houses anymore. That just recently stopped. But they may be doing like drive-bys. What kind of cars are you driving? What kind of house do you live in? Who are your neighbors? I mean, they do all this background investigation again, and then they start doing internal investigation. Now they're asking for all your financial documents. Better to deal with the IRS collections that hasn't done none of that stuff than to deal with the revenue officer. So everybody that's out there that has this issue, they're going, well, I'll just wait. No, you don't want to wait. And then on top of that, if you're in that that side where you've been contacted, you got that officer, it costs a hell of a lot more if you think about it to deal with that. I always tell people, if you got a stomach, it being a former EMT paramedic, I think in a lot of things like the medical industry. If you're sick and don't feel well and you just go down to urgent care, you know what? You got urgent care costs. They might give you some medicine. You're done. If you wait until the very end, you're in the emergency room. That's going to cost you $30,000 to deal with it. So deal with it before it becomes that emergency. Luckily for me, I didn't get that point where it was the revenue officer. For me, what caused me to do it, I met a woman that I wanted to get married to. That's another major thing. For me, that's what it was. I literally I met my wife. I was working as a mortgage officer. Later in my career, I was no longer a paramedic, became a mortgage officer. I was working in my career, met a girl that wanted to buy a house, and we started dating, and I got engaged to her, and our engagement lasted a couple of years. And here's the thing, guys. This is my scumbag move. Scumbag move of the year. I married her and never told her I had this IRS issue going on.
Oh, wow.
Never did.
You're one of those scrubs that we hear about in the music videos.
Oh, it's 100% scrub. Literally one. So here this guy.
Or you were a scrub, Carlos.
Yeah,
We'll give you,
literally 8 years of unfiled.
You redeemed
tax
yourself.
return, literally $100,000 in tax debt, and I married her, and I realized what I had just done.
Oh, man.
Because her problems instantaneously My problems became instantaneously your problems. And that's the worst thing you want to do. And, we even wrote a book called Love and Taxes, dealing with tax problems in relationship, because one of my goals is to let people know out there is that these problems just don't go away. And a lot of people just put their head in their sand, like you said earlier, Matt. I'm just not going to deal with it until it becomes a thing. Well, the problem is you don't know when you're going to fall in love. You don't know when your kid has to go to college and you got to apply for financial aid, but you haven't filed your tax. We get tons of people that come to us. I haven't filed my tax returns in years, but my kid needs to go to college and they want our tax returns. So
yeah. That's pretty wild. Well, something comes up for me. I think it's pretty clear the advantages of dealing with it now. If I'm putting myself in the shoes of a business owner, contractor, who's 1, 2, 3, 5, however many years they haven't done their taxes, every year it gets scarier and scarier, I presume, to deal with this. So if we drop into the emotions of what they're going through when it comes to taxes, there's probably shame and fear, right? Like those are two of the biggest emotions they're dealing with. So, it's hard to sit in front of somebody who has shame and fear and try to convince them to move forward anyway. What are some stories that you have of people you've worked with, maybe especially contractors or small businesses, who came to you with those emotions, and maybe give us some stories about how it worked out for them, so that we can encourage our listeners to do something about it, even though they're feeling that way.
Gotcha. Yeah. And you're right, Matt. Not only is it shame, fear, anxiety, it affects your health dramatically.
Yeah.
Dramatically. When you have that kind of fear, when you can't pick up your phone because you're afraid who's going to call, when you're, running out to the mailbox to grab the letters before your spouse sees them. We see this. And I just recently had literally a contractor who was in the hospital. His wife came in here. They reached out to me and they just said that we have a major tax issue. The wife was uncontrollable. She could barely talk on the phone. Brought her sister in, and her husband was in the hospital for anxiety attacks. And they didn't know what was going on, but he was in the hospital for days. And when she went home, she was like looking for medical records and found a big box of IRS letters. Unopened IRS letters. As she started opening up these IRS letters, realized he hadn't filed in years. And the challenge for her is that she was an immigrant. She was here legally, but she was still trying to go through that citizenship process. A lot of people don't realize is that you have to file your tax returns to finish the citizenship process. All returns have to be currently compliant, right? So her fear was not only that what was happening to her husband, but all these tax returns, but now her citizenship part of this thing was in jeopardy. So there was all kinds of different things going on here in her situation. When she came to me, and her husband, I had to talk to him on the phone briefly just to let him know that what we were doing, because it's his tax issue. Bottom line, we ended up getting, all those letters. I went through all those letters. We ended up pulling all the tax resources to get these returns filed. And on top of the massive balance that they had, because the IRS did file what are called substitute for returns, which is basically when you don't file a return, the IRS or the state has the right to file their return on your behalf internally with no deductions, no nothing, standard deductions, no business expenses, nothing. And they just assign a tax bill so they can start collecting. And usually these are just outrageous tax bills, because imagine if you just had $1 million of gross income coming in and there's no business expenses, that's going to be a massive tax bill. Well, we ended up fixing all that. What was interesting in this situation, not only was the entire tax bill wiped out that they had on file, she had 3 years worth of refunds that were available to her. So here's the thing. This husband had dealt with this for years of not filing, only to find out that he really didn't even have a tax problem. He had a filing problem. And that happens a lot of times when people reach out to me, especially non-filers. They're like, I owe the IRS a lot of money. I haven't filed. And I always tell people, the reason I do what I do in the way I do it in phases is because you may not have a tax problem. You may just have a filing issue, because once we file the returns, the tax problem actually disappears. And they're like, oh, I never even thought of it that way. Absolutely. So, and that's a perfect example of how somebody ended up in the hospital because, and that's what it was. It was anxiety induced stress that led him into the hospital because he didn't know what to do.
Yeah. Wow.
So I think this is wild, Carlos, being the things that people go through around their taxes, because it's once a year that people think about it. But I think that also that once a year lends itself to that stress, because people don't, especially when often don't plan, long term. Maybe they don't have a bucket of money that they pay attention to that they know they're going to have to deal with taxes. But what are some of the, because I think they end up doing it almost by mistake on this non-filing. Absolutely. What are some of the actions that business owners can take during the course of a year to make sure that when it comes time, they're not in this freaked out situation that that prevents them from filing, right? Because I think everybody knows they have to file. The fact that they don't isn't, like, I forgot, like, that's nonsense. It's something else. But I think preventing that something else is probably the most important thing business owners can do.
Yeah, I'm glad you brought that up. And it's true, because what makes it stressful with this once a year event is because they've ignored it the entire year. And doing your taxes, especially you business owners out there, doing your taxes is not a once a year event. It's literally determining what was your income and expenses for January, February, March on a monthly basis. Because if you're doing that, at least, and worst case scenario, I tell people, and this ultimately comes down to doing some basic bookkeeping. And most people are terrible. I am a terrible bookkeeper. I hate believe it or not, I hate dealing with numbers, 100%. So you have to hire somebody that's good, that enjoys. You bring me a bunch of bank statements and receipts, I almost want to puke. I don't want to look at that stuff. But there are people in this world that are happy to do that. They love doing that. And I tell people, the best investment you can possibly do is either hire a bookkeeper that looks at your books, and not monthly, which is the ideal situation, at least quarterly. So, come towards the end of the year, you can just pull those numbers together, hand it to your tax person, and it's instantaneously done. I mean, that's really the simplest thing you can do. Now, AI, we were talking about this earlier, AI is changing a lot of it. Now and I'm actually doing research on AI type bookkeeping services that literally just connect to your bank account and does this all for you instantaneously.
So I think there's an interesting point, Carlos, here. So hiring a bookkeeper that knows what they're doing and is happy to do so is important. Yeah. I think what a lot of small businesses get into is they either have their spouse do it, their mother-in-law sort of doesn't know it, because they view the expense of spending money on an actual bookkeeper to be a waste of money and a waste of time. Right?
That used to be my thought, honestly. It really was, even for years in the tax world. I'm like, I can do that stuff. But then you start to realize, guys, if you got a $10,000 tax bill at the end of the year, and your bookkeeper probably would have cost you, let's just say, $1,000 for the year, and I'm just throwing numbers out there, that's a 100% tax write-off. All it does is reduce that overall tax bill that you just had. So it doesn't cost you nothing, because the bookkeeper is a 100% tax write-off. You write off every penny that you pay that person.
Yeah. Well, and I think to add to that, you guys bring up a really, really great point. I think the other reason that we see so often your mother-in-law, sister, wife, brother, whatever, some family member, is the trust of having someone else manage their finances, right? And of course, we all know that there's a way to put in even basic controls that would prevent a bookkeeper from stealing money. But I think, it's so common that business owners just want somebody that they innately trust, who may not even be doing a great job of the bookkeeping, but they trust that person with their finances.
Yeah, I mean, you got to be really careful. There have been multiple cases that we have seen where it's almost in every case is the most trusted person, that family member that was the bookkeeper or the controller, is the one that was stealing.
Yeah.
Literally. And I can tell you this, a lot of you guys might be watching this and you're an S-Corp owner or corporation. But when you're dealing with an S-Corp, this is not even should I think about this? It's mandatory. There are specific corporate books that have to be done in a certain way. There needs to be payroll on every S corporation. This is a really important just tax tip for your listeners. If you are an S corp and you are not taking a salary from your business, you are going to be audited, period. This is number 2 priority for the IRS. It's number 1 in the business realm, is they are going after those S corp owners that are not paying themselves a reasonable salary. And the only way to determine that, you need to talk to your CPA and do that. And they're actually going after accountants, EAs, people that do the books or taxes for these S corps. If they continue doing tax returns for people that aren't taking a payroll, they're going after the tax professional for allowing them to do that.
And they're going after them because the assumption is that they're running expenses through the business that are not real business expenses. Is that?
No, it's because what they're doing, the very basics of an S corp is that when you have your money going through an S corp and you take money out, there is no self-employment tax. As a regular sole proprietor, you're not incorporated, or it could be an LLC that's not incorporated. If you're taking out money out of the business, the profit, there's a 15% sole proprietor self-employment tax that you have to pay. It's mandatory. It's on your tax bill. When you incorporate, that self-employment tax goes to 0. There is no because you're not self-employed. So when you're taking money out of the S corp, the profit is called a distribution. Well, there's 0 self-employment tax on that distribution. There's regular employment tax, but 0. So what the IRS is so people are trying to kind of take that little loophole thinking, oh, I can get away from this other 15% tax by incorporating and just pulling the money out here. IRS is not. You need to pay yourself a reasonable salary. That way we can get our portion of that tax back. So that's a very simplified version of what I'm trying to say. But it's just know this. You have an S corp. If you're not on salary, you're going to be audited. It's not if you're going to be audited. It's not maybe. It's you will be audited. And we're seeing that like left and right now of people getting audited for that.
Interesting.
Yeah, that is interesting. And so on that topic, Carlos, if we're thinking about our audience as home service contractors, what are things they can do to prevent an audit? And I know that's sort of like black magic, but or maybe the reverse of that. Maybe what are the things that are pretty much going to guarantee an audit, right? So how, maybe give us some insights into both of those things for those people who are compliant and doing their taxes on a regular basis, but maybe they're pushing the limits. I know that sounds crazy, but maybe they're pushing the limits. Give us some suggestions there if you can.
I've been asked this question multiple times on multiple news networks doing their tax segments. And I've always said that the new way a lot of people kind of almost automatically guarantee an audit is just not reporting all their income. Whether you're a cash business and you're only reporting your merchant account sales, IRS knows that you're in a cash business. They know this AI system knows what the average cash flow that's coming in. Because you got to remember, you might be cheating on your taxes, but not everybody else is. So they have averages of what cash averages are and what merchant account averages are coming into the business. So obviously not reporting all your income. For a lot of non-business owners, and this is a very common thing. Remember back in the day, guys, back in the early 2000s, 90s, that you waited in the mail to get your tax documents, your W-2s, your 1099, they all came in the mail, right? You just stack them all up. Well, with the advent of electronic delivery, a lot of companies don't send that in the mail no more. What do they send you? An email. Go download your tax documents online. And the problem is it's happened to me multiple times. The email went into spam and you might have forgot about that brokerage account or that 1099 that you got from somebody. So I always tell people, double check all your emails, make sure you go through all your accounts. The best thing you can do is pull the IRS's transcripts. You can get your wage and income transcript from the IRS before you do your tax returns.
Oh, that's interesting. No, I don't think anybody really knows that. And that's just from irs.gov?
Yeah, you can go to irs.gov and order them. Usually they're available after March. So a lot of times you got to file an extension to get those. So that's a free way of doing it. You can go over there and you can download everything that has been gotten on you. I have a service within my company where we do IRS monitoring, where we monitor your IRS's account literally on a weekly basis, and we get we actually get an electronic notification when they're available. We just download everything and shoot them over to our clients in the portal when they're done.
That's great. Yeah, I think
You just start matching things up. It's like everything in there. And our software will also notify us when somebody underreports stuff. So the IRS will, like our software will flag an audit for the IRS typically 5 to 6 months ahead of time. It literally will just pop up and say, the IRS is looking at your return for underreported income. And I've saved people, one person, like millions of dollars because what had happened, they didn't report their stock basis correctly on their return. So the IRS thought they made millions of dollars. So they were getting ready to get audited on that. I told them what happened. I gave them all their documents that the IRS had, and the CPA caught it, was able to fix it.
Oh, that's great. But I think you said mention. I think I want to clarify this. You said check your email, check your spam.
Check your email, check your spam. You want to double check.
But as far as timing, all of those documents on an annual basis are due by January 31st, right? Is like when they're supposed to be sent.
That is correct. If you're sending those out to people or you're waiting for them, you're supposed to get them. They're due January 31st, so you normally get them the first couple of weeks of February.
So I think that period between, call it January 15th and last week of January through mid-February is when you actually need to be really diligent checking those inboxes.
Yeah, double checking all that stuff. Absolutely. Talking about audit, a new thing that's going to start happening is just more and more people getting audited with these cash apps, because this whole, the whole 1099 reporting, it was at $600. It's supposed to change it. They've been going back and forth constantly. Me personally, I tell people, if you're going to use a cash app, use Venmo. Don't use anything else. Venmo is a bank-to-bank transaction, and those aren't reported via 1099s. Everything else is, which can cause a potential audit. I actually had a client that was being audited because they had said that he didn't report all his income, only to find out that the cash app he was using, he was sending money to his wife constantly, like her allowance, her monthly allowance. Well, the IRS just got a report saying that, she got like $15,000 throughout the year. So they thought that they had $15,000 extra income that wasn't reported. And all it was just, he reported his income. He was just transferring money over to her. And again, it caused stress, anxiety, money to hire me to go figure out what the hell was going on. So you got to be careful on those cash apps.
As an almost 50-year-old, I just turned 49. My cash app is still my wallet and greenbacks. I think I still haven't gone fully electronic on that.
And people ask me all the time, can I send money, whatever? And I'm like, I don't use that. Sorry.
Look, I think we've identified quite a lot of areas that are of concern to these the home service operators. Make sure you do bookkeeping, ensure that you are filing properly, keep track of your business, make sure things are going right. But even from that, you talk about getting audited and you talk about the things you have to do. I think a lot of small businesses, and I'd like to get into this a little bit, do tend to run too many things through their business as far as personal expenses, whether it's their wife's car or a vacation home or a boat or whatever, groceries, gas that's not business gas. Like, what do you see? What happens there? Like, and I know people think this is easy. It's just something it'll slide through. Does it slide through, and should they worry about it?
And here's the thing, guys. Everybody does it. I mean, it's like you pull out your wallet and you grab a card and like you charge it. Oh shoot, that was the business card. Should have been my personal. It happens, but you're not supposed to do it. And the IRS calls that co-mingling. And depending on how bad it gets, a lot of things could change real fast. Like with an audit, if they're auditing the business and then they see a lot of co-mingling, they're going to say, pull in your personal records here. Let us go through line item by line item what's going on. It just creates and this goes back to like the bookkeeping or just keeping your books straight. You got to be clean. And believe it or not, Brent, a lot of people, for me, it's just I'm shocked how many business owners are running their everything just in one account. I mean, they haven't even separated their business accounts. You know, that's almost kind of it's getting to a point where, oh wow, you actually have a business account and you're running almost everything through it. I've been catching a lot of people just running. Well, yeah, my all my business account goes into this personal account, and I pay my rent, utilities, or whatever, all through that same account. And you know, and if you're that person, just go open up 2 separate bank accounts, keep the business for business and the personal.
You know, it's funny. This is where this gets into a legal issue too, not just tax, but if you're commingling accounts that extensively, you have now done what is considered piercing the corporate veil. So if there's any liability that you have on your business, could be a worker fell, could be cause a problem at one of your jobs, whatever, you're going to get sued, and that lawyer is going to be to reach all your personal assets, and you've lost that limitation of liability which is really the only reason you have a corporation ultimately.
Ultimately, it's and a little bit of that is obviously some tax benefits as long as it's structured correctly. But yeah, you're 100% right. It needs to be done correctly.
Yeah, I'm so glad you brought that up, Brent, because that was the first thing. Once the commingling word got brought up, I'm thinking, okay, there's the financial impact of it, but there's the legal impact that I don't think people realize. And I'm incredibly grateful that you brought that up because, that's a recommendation from most attorneys and CPAs is that you become an LLC or an S-Corp for that protection, that liability protection. And this goes for, even if you have real estate LLCs, right? I mean, if you're a successful small business owner and you've been able to buy your building or multiple buildings, those are going to be in LLCs. If you're commingling expenses with those LLCs and inside of your business or personal, anytime you're commingling, you have that opportunity to essentially drop the protection from LLC and S-Corp. This could be a huge problem.
It's scary if you think about it. It would make you stop commingling.
Yeah. Yeah.
And this ultimately all goes back to where we started this is that, it's not going to happen today that you're doing this today. These things happen, the tax bill shows up 3 years down the road, and you're all of a sudden you're being audited for something that happened 3 years ago. And then all of a sudden they see all this commingling that happened, 3 years ago. And then it's a little snowflake that just turned into a massive snowball that's going to hit you hard.
Yeah, no, I was just curious. We probably want to wrap up soon, so I want to make sure that we kind of, wrap it all up in a bow for our listeners. If somebody's sitting there, they're experiencing the pain, the shame, the frustration, the challenges, like, what do they do? Obviously you're a resource for them. There's other resources. Like, what are the first 3 steps they should take to help relieve some of that anxiety and get things pointed in the right direction?
The first step is step 1 is really the recognition that just be honest with yourself that I got this issue that I haven't dealt with, and just understand. And this is something I had I've been in those shoes, is that it's not going to go away. The IRS or the state entity you may be dealing with, it's not going away. It's not going to, they're not going to forget about you. They're really good at not forgetting any of this stuff. And if they haven't contacted you for years, it's not that they forgot about you at all. It's just they haven't gotten to you yet. So that puts you in a totally different, and once you recognize that's great. And then you can do something about it. Step 2, I don't care if you're watching this, I don't care how bad your problem is, there is light at the end of the tunnel. The IRS can't get blood from a rock, period. And they know that. So I don't care whether you owe $50,000, $20,000, $1 million. There is light at the end of the tunnel. And all the IRS really wants, especially the IRS, is just like, hey, work with us. Tell us what's going on in your life. If you haven't filed, they just want to know, okay, how much money do you really owe? And then here's the thing. When it comes down to dealing with the tax problem that you have, the IRS really wants to know, what do you pay for rent, utilities, food, your car payment, your insurance? Because they're going to allow you to make sure that you can pay all that stuff to move forward. And if you can, because things are so tight, there is time and time again, I get people into what's called a not collectible status with the IRS. The IRS just agrees with us, like, yeah, they can't afford to pay us back, so we're just going to leave them alone. That's an option. And then for a few people, don't believe the radio and TV that IRS settles debt for pennies on the dollar. They do, but you have to, it's strict qualifications. And there is Brent, Matt, there is way too many companies out there making these claims and telling everybody, if you call them, then everybody qualifies. And then you just got to pay them $5, $10, $15,000, and they're going to submit the paperwork and you're going to qualify for this, only to find out 6 months, a year down the road, you never qualified in the first place. And then you try to reach out to the company, they're gone. IRS has a whole website on this thing. They're offering compromise. They're called mills. They basically are just ripping people off. I can tell somebody in a 3-minute conversation, 3 to 5 minute conversation, whether that's even a possibility in their situation. And there's no cost for that. So you just got to be aware. So if anything, Matt, just be aware that the problem exists. It's not going away. There is light at the end of the tunnel. And find somebody that's experienced in dealing with the IRS. Not everybody in the country deals with the IRS. There's only 3% of EAs, that's what I am, or CPAs or attorneys that actually do this type of work. When you got a tax problem, deal with the specialist that's dealing with it. So
I think it's a great moment for you to share your contact information. So if they got this issue, they can contact you, Carlos.
Oh, absolutely. The simplest thing to do, if you go to taxdebtbook.com, I give the ebook version of this away. It's called How to Make the IRS an Offer They Can't Refuse. It's basically the 3 easy steps to solving any tax problem. There you go. Any tax problem. So that book is for free there. I basically share my story, and I've actually had people call me up. I read your book. I was able to solve my problem myself. And that's what I want to hear.
Cool.
You know, that's my book. My newest book is not even out. It just hit Kindle, but I'm waiting for it. I still have the publisher model. The big elephant in the room, believe it or not, it's shut down Cali Claw. And for you guys that don't know who Cali Claw is, that is the State of California Franchise Tax Board. Because if you live in California or any state that has a state taxing board, they are 100% worse than the IRS.
Wow.
100% worse. They will shut down your business if you owe them money. They will make up tax amounts. Even if they have no proof that you made 1099 or got income, they will make up an amount that you owe just because you had a license or a business license. We see it every day that it happens. So that's going to be my new book. It's coming out soon. In fact, if you download this book, anybody that downloads my taxdebtbook.com today, once this is ready to go, I will email you a copy of that book as well.
I appreciate it.
Yeah, the taxdebtbook.com website, taxdebtconsultant.com, learn more about me. But
Are you on any socials, Carlos?
no, if you just go to taxdebtbook.com and Tax Debt Consultant, all my socials are on there.
Cool. Got it.
So this has been, I would say, the scariest episode we've ever recorded.
Yeah, we should have done this around Halloween, Brent.
Yeah. This is like I'm gonna kill you, or someone's gonna come. It's like IRS is Freddy Krueger for most people.
Oh, yeah, it's funny, guys, because I love Halloween time because I have some great marketing stuff that I do.
That's
with,
great.
with Freddie and this and that. But I'm going to tell you what you guys both did today. You literally saved somebody's life. You did. Somebody's going to be watching this on your podcast, and their life's going to be saved. And I don't say that like haphazardly. I have a friend in Texas that a doctor reached out to him because he owed a lot of money in taxes in the $1 million range. He hired him, and a few weeks later ended up killing himself.
Wow.
It's just
Fun
because the stress is unreal. And no, guys, and I say this, it's just because the stress is crazy. I've been there. I know what it's like. I lived that stress for 8 years of not filing, and it still took me years to finally deal with all of it. And you saved somebody's life, because here's the thing is that the IRS is not going away as much as a lot of people think. The administration, they did fire a lot of people, but it's not going to go away. And they're not going to forget the money that's owed to them. And they're going to do what they got to do to collect. And we got to do is just to make sure as we help people solve their problems.
That's great.
Always go away.
So I'd like to bookend this episode with we started off really fun. We're talking about our children going to college.
Yeah.
I saw something about you that I'd like to hear just 2 minutes about. What was it like writing a book with Dick Vitale?
That was the coolest damn experience ever. You know, Nick was going through he's still going through some cancer challenges. And, you know, he decided to write this book, Never Give Up, because he does not give up. And I had the opportunity to write a chapter about my story about not giving up, dealing with things like that. But the cool part was going to our private book signing where we all got to have dinner together. And what's neat with Brent is that we're sitting in an Italian restaurant, and he could barely talk because he had just got finished with some radiation on his throat. And I went up and I said, "Pleasure to meet you." And I happened to be wearing a Navy Academy shirt, polo shirt. And he goes, "You go to the Navy Academy?" He kind of whispers to me, and I said, "No, my son did." He goes, "One of my best buddies, David Robinson, went to the Naval Academy." And I go, "Oh yeah." I go, "My son went there." And I showed him a picture of my son, and he goes, "You're a good dude." So I go sit back down, across the restaurant, and then literally an hour later, he calls me back over. He does this bit, and I walk over him, and he turns to his wife. "This is a good dad. His son went to the Naval Academy, just like my buddy David Robinson." And that was just the coolest experience ever.
That's awesome.
Great.
Love that.
I had to hear that story after seeing that in there. So, Carlos, thank you for your time. This has been a great episode, really informative. With Flywheel Effect. I think those that get the gist of this will get off their butt and actually take care of their problems. There's so many people out there that don't.
Yeah.
Exactly. Any last thoughts, Matt or Carlos?
No, Carlos, I really appreciate you being here. An hour flew by, very informative, as Brent said, and I think incredibly helpful. So thank you for helping us change lives.
And thank you for the opportunity.
So again, this is Brent Sonnek-Schmelz, Matt Bernath, for another episode of the Flywheel Effect. And if you have someone who you think you find this episode useful, please share it, or give it a like, or put it out there. Give us that. I sometimes screw that up. I screwed up. I'm going to start that one over, guys, and we'll see if they have. Oh, if you enjoyed this episode, please give us a like, a follow, or share it with someone who you think will find it valuable. And again, this is Brent Sonnek-Schmelz and Matt Bernath with the Flywheel Effect. Thank you.
Thank you for tuning in to the Flywheel Effect. Our journey through the intricate world of luxury home services continues to be fueled by your passion for excellence and innovation. If you found value in our conversations today, don't forget to follow us wherever you get your podcasts. More insights and resources. Visit us online at growwithvital.com. Until next time.